to this week's video update. My name's Scott. I'm the Market Insight and Flex Manager here at Zenergi, and this is the edition 3 of our weekly video updates. Today's topic is going to cover European gas storage levels, and we're going to go into greater detail into that and the situation they're in. As always, I will run through the weekly market movements. I will be looking at the other commodities, seeing what they've done over the week. We'll recap the previous week and what happened, and we'll look at the week ahead and what to expect. So let's begin. This is just a breakdown of the order of the content we'll be covering today. So the first slide and first graph you see is the gas prices week to week. So these did actually increase by 7% week to week. It was a very volatile week in the markets. You can see on the last day, the Friday, prices did come down around 7%. We were looking at some substantial gains that did correct itself towards the end of the week. Overall, that's a 7% gain in prices. Power was very similar, just under 7% in terms of rises throughout the week. Again, another volatile week for the power market. It's very strongly correlated to the gas market, and we can see that volatility in the movements. Again, it came down towards the end of the week as well. And just to explain this graph a bit better, so you can see your typical 12, 24 and 36 month prices illustrated in each line. And you can see the kind of premium that the shorter dated contracts are trading right now compared to the longer dated contracts. So what happened last week? So we had a few key events which I want to run through. Firstly, you may well have noticed it was a very cold week last week. Temperatures were unusually cold, around 4 degrees below seasonal normals, which is quite a difference. And as a result, demand has been much higher. And this really did help lift prices at the beginning of the week with that added demand, particularly for gas. As well as this, Germany triggered an emergency supply plan. This was in response to a slightly growing likelihood that gas supply from Russia may be reduced or halted. So they've introduced stage 1 of 3 of their emergency gas rationing. At the moment, it's just advisory really on stage 1, but the markets obviously were a little bit concerned with what was going on there. Other notable countries were Austria and a couple others, but mainly the focus was on Germany as the main usage of gas. So that did help the markets to continue rally towards the middle of the week. Then we saw a couple of bearish factors come into play. So firstly, we saw some indication of compromise over the ruble payments. So just to give you some context, Russia have insisted from the 1st of April that gas purchases of Russian gas will be purchased in rubles. There has been a lot of dispute. The G7 and most of Europe have not complied with this and said they won't. However, there was a bit of compromise. So it looks like Gazprom Bank, who have not been sanctioned by the EU, but have been sanctioned by the UK, will almost act as a facilitator. So they will take payments in dollars and euros. They'll then convert it to rubles to then complete the transaction. So there's probably more news to come on this topic and more negotiation and compromise, but it has reduced fears of the worst case scenario that gas will be halted. So that has reduced fears in the market. And then we have a constant theme throughout the last couple of months, really very strong LNG supply once more. So March had 23 deliveries in total, which is fairly high. And April has already gone off to a good start. So we've had 4 shipments in April already. And there's a strong schedule ahead. So we should have well over double figures by middle of the month in terms of LNG deliveries. So that helps to bring the market down a bit. As we said, prices have gone up week to week. So where gas and power markets in the UK were quite volatile, the other energy commodities were actually pretty settled. Oil has kind of consolidated and bounced around just over $100 throughout the week. And then coal, again, strong consolidation there as well throughout the week. So yeah, this little change really compared to the previous weeks and the run-ups. in those prices, and that has helped to settle things going forward. Carbon as well, very settled week in terms of carbon. It's just bounced around really a euro or two. We can still see the premium that the UK carbon market is trading compared to the Europe one, but that is tightening ever so slightly, and I would expect that trend to continue into the next few weeks. So let's cover what's happening in the European gas storage. So the first graph I'm going to show you is the historic gas storage levels. So what you can see is firstly the blue line, which represents last year's gas levels, the red line, which represents this year's gas levels and the timeline, and then the grey area, which is the previous 8 years. So what we can see is from October all the way down to around the start of February, the gas storage levels have been the lowest they've ever been in that period of time. But we can see that the depletion of gas has kind of come to a halt from March, and we're actually now within the 8-year range band again, which is encouraging to see. We're not that far off last year's gas levels, and the only time gas levels were lower at this stage of the year right now was in 2018, which was when the beast on the east hit in March. So that was the only exception to gas levels being lower. So that is encouraging. It's still obviously at a very low point and is lower on average than it should be, but it is encouraging to see that depletion has kind of halted, and within the next few weeks we should see gas storage injection season begin, and that will start to tick up. The next two graphs I want to show you paint a different story each, and they complement each other to give you the full picture. So the one on the left just breaks down the gas storage levels as a percentage for every nation in Europe. So we can see just how depleted most of Central Europe is. So you've got France, Belgium, Netherlands, and Germany all in the 20s or lower. Then you have the likes of Italy and Spain, proportionally higher. And then you have the UK, which is just a touch under 80% in terms of storage level. So just looking at that graph alone, or that picture alone, you would think the UK has plenty of gas storage compared to its European counterparts. But if you just look at the image on the right, the graph on the right, you can see, in actual fact, our maximum storage level capacity is actually very minimal compared to other nations. On current levels, we actually do have the least amount of gas in storage. So that has always been an issue for the last few years, as our storage facilities are substantially lower compared to the rest of Europe. Considering we are in the Northern Hemisphere, we do have colder winters, definitely colder winters compared to Italy and Spain, for example, yet our storage levels are trailing massively in comparison. So that is one of the reasons we're so reliant on LNG and we're so reliant on our interconnection with Europe. But it is somewhat positive that we do have some buffer, some storage there in the UK. But that graph just illustrates perhaps just how minimal that is compared to Europe, and why European storage levels are so much more important really when pricing the market. And then finally, just to kind of break this down for you, what we can see is the stack of gas used and where it's sourced from. So we can see in the light orange, almost, I should say, the vast majority of gas is coming from LNG shipments. So well over half, I would say. We then can see the input from Norway, and in the dark red is the flows from the North Sea, so the UK North Sea. We're actually exporting gas as well, albeit very minimal. So we're exporting gas into mainland Europe, which you can see in the blue stacks there. So overall, we can just see the importance LNG has on the UK supply picture right now. So let's look at the week ahead. So we still have some bullish factors in play. There is some uncertainty around how exactly the Russian payment for Russian gas will actually operate still. And there's also the potential further sanctions from the EU against Russia. So over the last few days, there have been reports of certain war crimes being reported in Ukraine. So it is expected the EU and the USA will react to this, and most likely in the form of sanctions. So the market is waiting and expecting that in a way. Any of that was to occur, it would be bullish in the markets. Temperatures are set to return to seasonal averages, so that cold spell we endured last week should be ending. Again, it should just then return to seasonal averages. And peace talks are expected to continue between Ukraine and Russia, but perhaps with recent events, there'll be a lot of progress to be made. Some bearish factors in the market, so we have a strong LNG schedule till mid-April, as I mentioned. That will always weigh down prices. And gas flows from Russia into Europe actually do remain steady right now. In fact, they were the highest they've been in a fair few months, since November, I believe, last week. So that, if that was to continue, would be bearish on gas prices. As always, further information can always be found on our website, marketwatch.zenergi.co.uk. And Monday to Friday, we do have the Market Watch Live team, which is available to chat between 10 and 12. That's everything for today. I hope you've enjoyed. If you do have any topics you wish for me to cover in the following weeks, please do give us a message on the Market Watch Live chat, and I'll gladly look if I can cover that for you. Thank you and take care.